Should you buy or keep renting? Let's do the real math. Everyone has an opinion about renting versus buying. Let's skip the opinions and look at the actual numbers for your specific situation. Hi there. I'm Gurfinkel, Senior Loan Officer with 30 years of experience and over 2,000 families served over my lifetime. And I'm about to do something that might shock you. I'm going to tell you when renting is actually the better choice. That's right. Sometimes I tell people not to buy because my job isn't to sell you a mortgage. My job is to give you honest financial advice. And sometimes that honest financial advice, keep renting for now. But most of the time, the math tells a very different story than what you're hearing from your rent-loving friends or your real estate-obsessed relatives. Or let's cut through the noise and look at the real numbers. Now, don't like or subscribe until you get to the end of the video, because I'm going to show you exactly how to calculate if this is your situation. Not some generic example that doesn't apply to your life. The real total cost comparison. Here's where most people get this calculation completely wrong. They compare their monthly rent to monthly mortgage payment and call it a day. That's like comparing apples to, I don't know, a whole fruit salad. Let me show you what I mean with real numbers. Let's say you're paying $2,500 a month in rent and you're looking at a house with $2,800 mortgage payment. Most people think, oh, buying costs $300 more per month. Wrong. Here is the real comparison over 5 years. Renting at $2,500 over 60 months equals $150,000. But wait, the rent goes up every year. Let's say 4% annually, which is conservative in most markets. But by year 5, you're paying $3,000 a month. So total paid over 5 years, about $165,000. What do you have to show for it? Nothing. Zero. Zilch. Nada. Buying $2,800 times 60 months, $168,000. But here's what's different. About $600 of that payment is going towards principal, building equity. Plus, you get tax deductions. Plus, your payment stays the same while your rent-paying friends are getting hit with increase every year. Personally, I refer to home buying as buying your own rent control. But let's keep going. After 5 years of buying, you've built approximately $45,000 in equity through principal pay down and appreciation. So your real cost, $168,000 minus $45,000 in equity equals $123,000. Renting cost, $165,000 with nothing to show for it. Buying costs, $123,000 with a house you own. Tell me again how renting is cheaper? Hello? Let's talk about the hidden rental costs nobody talks about. Let's talk about the hidden costs of renting that nobody wants to acknowledge because they don't fit the renting is freedom narrative. First, annual rent increases. I just use 4%, but in hot markets, I've seen 8 to 10 annual increases. That $2,500 rent becomes $3,500 in just a few years. Your mortgage payment stays exactly the same for 30 years. Second, moving costs. The average renter moves every 2 to 3 years. Moving truck, deposits, time off work, the stress of finding a new place, that's easily $3,000 to $5,000 every time you move. Homeowners, they move every 7 to 10 years on average. Third, renter's insurance plus the stuff you can't control. Your landlord decides to sell. You're moving. They decided to renovate. Guess again, you're moving. They decide to convert to condos. Again, you're moving. Every move costs money and disrupts your life. Fourth, the opportunity cost of not building equity. Every month you rent, you're paying someone else's mortgage. Building someone else's wealth. That's not just a payment. That's a wealth transfer from you to your landlord. And here is the big one nobody talks about. Rental properties are investments for landlords. They're not running charities. Your rent has to cover their mortgage, their taxes, their insurance, their maintenance, and their profit. You're literally paying for all the costs of homeownership plus someone else's profit margin. Am I throwing shade at the landlords? Oh, hell no. Because frankly, the ma and pa investors and landlords, that's how they're building their generational wealth. Homeownership benefits beyond the payment. Now let's talk about the benefits of buying that don't show up in a simple payment comparison, but make a huge difference in your financial life. Tax advantages. You can deduct mortgage interest and property taxes, depending on your tax bracket. That could save you somewhere between $3,000 and $8,000 a year. Renters get zero tax benefits. For savings, every month, part of your payment goes towards principal. It's like having a forced savings account you can't touch, building wealth automatically month in and month out. Most people are terrible at savings. Homeownership forces you to build equity. Inflation hedge. Your mortgage payment stays the same, but inflation makes that payment cheaper over time. In 10 years, that $2,800 payment will feel like $2,000 in today's dollars. Meanwhile, rent keeps going up with inflation. Control and stability. You can renovate. You can get a dog. You can paint the walls purple if you want. Don't recommend, but hey, you're not at the mercy of a landlord's decisions or market whims. Appreciation potential. Yes, home values can go down, but over time, real estate appreciates. The median home price in 1990 was $123,000. Today, it's over $400,000. That's wealth building you can't get from renting. Break-even analysis. When does buying pay off? This is where the rubber meets the road. How long do you need to stay in a home for buying to make financial sense? The old rule was 5 to 7 years, but that was when the homes cost $200,000 or below and closing costs were a hell of a lot lower. Today, with higher home prices and higher closing costs, the break-even point is typically 3 to 5 years, depending on your market. That's how I calculate it for clients. Take your total closing costs and divide by your monthly savings from building equity plus tax benefits. That's your break-even point. Now, that break-even point changes if your real estate professional was able to negotiate that the seller pays your closing costs. Then that break-even point is even faster. So example, $8,000 in closing costs divided by $400 monthly in equity building and tax savings, that's 20 months to break even. After that, every month you're ahead compared to renting. But here is what most calculations miss. They assume rent stays flat and home values don't appreciate. In reality, rent goes up and home values typically appreciate, which dramatically shortens your break-even period. I had a client who was convinced renting was cheaper. We ran the numbers. After 18 months of home ownership, she was absolutely ahead financially compared to renting. Why? Well, because the rent would have gone up $200. Her home appreciated $25,000, and she built $8,000 in equity through principal paydown. The math is simple. When renting actually makes sense, now here is where I prove I'm not just trying to sell you a mortgage. Sometimes renting is the better choice, and I'll tell you exactly when. If you're planning to move in less than 2 years, rent. The transaction costs of buying and selling don't make sense for short-term stays, unless of course you plan to keep that home as an investment. If you're in a market where home prices are 25 plus times annual rent, renting might make sense. This happens in some expensive coastal cities where a $3,000 rental would cost $900,000 to buy. If you have unstable income or poor credit, renting gives you flexibility while you get your finances in order. If you are in a declining market where home values are dropping consistently, renting protects you from losses. But here's the thing. These situations apply to maybe 20% of people or less. For the other 80%, The math strongly favors buying, especially if you're planning to stay put for 3+ years. Let me tell you about Jessica and Mark. They came to me convinced that renting their $2,200 apartment was smarter than buying. We're saving money, they said. I ran the numbers. Over 7 years of renting, they would pay about $190,000 with annual increases and have nothing to show for it. Buying a similar home would cost them $210,000 in payments, but they'd build $85,000 in equity. Net cost of renting, $190,000, you guessed it. Net cost of buying, $125,000. They bought the house. 2 years later, they called to thank me. Their old apartment rent had gone up to $2,800, while their mortgage stayed at $2,400. Plus, their home had appreciated $40,000. Look, I get it. Renting feels simpler, and there is something appealing about calling your landlord when the toilet breaks, a dishwasher runs, or not runs, or leaks, or whatever. But simple isn't always smart, and convenience isn't always cost-effective. The math is pretty clear for most people in most situations. Buying builds wealth. Renting builds your landlord's wealth. But the key phrase is most people in most situations. Your situation might be different. That is why I'll run the numbers for your specific situation. No sales pitch, just honest math. Math has no emotion. Sometimes renting is better, and I'll tell you if that's the case. But most of the time, the numbers tell a story that surprises people. Here's what I want you to do. Stop relying on generic online calculators that don't know your tax situation, your local market, or your personal plans. Book a consultation with me. It's absolutely free, and I'll run a personalized rent versus buy analysis for your situation. I'll show you the real costs, the real benefits, and the real break-even point. No pressure, no sales pitch, just honest math so you can make an informed decision that is best for you. Because here's the truth. Whether you should rent or buy isn't a philosophical question, it's a math problem. And math doesn't lie, even when it tells you something you don't want to hear. If this video helped you think about renting versus buying differently, smash that like button. Subscribe for more honest financial analysis, and comment below with your current rent and what's holding you back from buying. I'll personally run some quick numbers and give you my honest assessment. Let's figure out what makes the most financial sense for you. I'll see you in the next one.